You felt it again today, that sinking feeling as you watch yet another trade hit your stop loss. This time will be different. I'll follow all my rules today, you said. Yet here you are, staring at another day of red. You can't have another red day. So you find yourself with your finger hovering over the buy button, ready to chase back what you just lost. Does this sound familiar? I blew $40,000 before discovering the truth. Trading isn't about mastering the markets, it's about mastering yourself. While everyone else was searching for the perfect strategy, I discovered that success had nothing to do with indicators or chart patterns. It was all about understanding how my brain was sabotaging my trades before I even placed them. Listen, if you want a quick dopamine hit, just full port your account into the open. You'll either double your money or lose everything you worked for. Please don't do that. But it highlights an important truth. Our brains haven't developed much since we lived in caves and ran from the woolly mammoths. Today I'll show you exactly how your brain has been wired by your ancestors. And no, I don't mean a close family member you don't like to set you up for trading failure. Then I'll share you the exact techniques I use to rewire my brain to trading probability. This is how to fix your trading psychology. What if I told you that your ancestors set you up for trading failure? The trading journey started thousands of years before you were even born. Look, here's a picture of LED's ancestors. He's trading Tesla, Apple, Nvidia, all in the cave back in the day. Look, I always said trading is in my DNA. Let's discuss something. Your ancient programming. You were programmed to not be a successful trader. Remember, it's not your fault, it's your ancestors' fault. So let's talk about that. Back in the day, we lived in caves, we had something called loss aversion. We would avoid losses at all costs because that means you could get hurt, okay? We don't want to fight a woolly mammoth. We don't want to fight a saber-toothed tiger. Now, remember, herd mentality, right? When you followed the tribe, right? When all the tribe was going this place because there's a bunch of food, that meant you would get fed. But this could affect you in trading. Next, instant gratification. You didn't know when your next meal would come. There was no Uber Eats, there was no McDonald's, there was no bodega store next door where you could get snacks and feed your family. You did not know where your next meal would come from. And lastly, fear response. The fight or flight kept you alive, right? So you could either fight the bad guys off and protect your family, or you can run from the giant woolly mammoth. This is all how you're programmed from your ancestors. But here's the truth. We aren't in caves anymore. Look, there's no caves in this picture, okay? This is a Miami penthouse trading stocks, talking on the phone, talking business with a fruit bowl. Cavemen didn't have fruit bowls. We trade options and hit multi-baggers. Look, John, 220% in 1 week. Jay Barres, 40% in 3 days. Look, 78%, okay? Cavemen did not have this. So you're probably wondering, how does this apply to trading? Your ancient programming. Loss aversion. You hold trades for too long, hoping they come back. You average down on losers, okay? Because you made a mistake, so now you have to average down in order to fix it. Herd mentality. You just follow whatever the popular strategy is because everyone else is doing it. You take random alerts on social media. Oh, this guy has a bunch of followers, so he must be good at trading. And you also panic when everyone else is fearful. Instant gratification. I'm going to take profit to 10% just so it's a green trade. I'm not going to hold till PT. I'm just going to take this one lotto. It's only one. And if it doubles my account, great. I'll have more money to trade with. I've been learning a new strategy, but it didn't work on one trade. So I'm just not going to use it anymore. It doesn't work. Here's a fear response. It made a move already. I'm scared to get in. It's too high. It's too low. I can't touch it. Or the trade dips for 1 minute. And you say, I'm going to cut my calls. Maybe I'm wrong. Or my favorite and last is I have been red for months. You have been red for so long that you actually cannot physically handle another loss. You are paralyzed by fear. But we didn't talk about the scariest caveman trap, FOMO. FOMO triggers every part of your ancient programming, loss aversion, flight response, everything. This is the deadliest caveman trap that you need to avoid. So let's review some trades that were affected by our ancestors and how we can prove that. But before we get into that, make sure you like and subscribe and leave a comment down below. Let me know what you learned. So here we have an example of loss aversion. So you decided that you're going to buy calls right here. What happened? Instead of stopping out at 20%, you held all day and lost 99%. Why? Because you were afraid of taking a loss. Loss aversion. This is ancient programming. So you held all day. You could even have been averaging down because it's like, oh, if it just bounces, I'll get out even. But what happens? You take a 99% loss, which is a huge hit to portfolio. Your small loss becomes a blown account, okay? Remember, as a trader, our goal is to keep a seat at the table, not blow all of our capital that we work so hard for. Remember, if you blow $10,000 because you refuse to admit you were wrong, that's going to take you months to make back. You're going to have to work extra hours, OT, just to fund your account. Don't do that. Take the small loss over a massive loss every single time. Here's another example. Herd mentality, following the crowd. People on social media for 34 days were calling the bottom. 34 days. This is 34 days of price action. All we did is continue going down and to the right. Okay, so if you bought here, you're down. Here, down, 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 down. You get the idea. Now look where we are. We're all the way down here. This is following the crowd. If everyone's calling bottom, we're likely not going to bottom. Just like how if everyone's calling a top, we are likely not at the top. That's how it works. Expect the unexpected. Life-changing money was made on the short side versus massive losses for people who are trying to buy the dip. Okay? Charts like that will change your life versus massive losses because all you want to do is buy calls and long stocks during a downtrend. Let's talk more about instant gratification or trading for now. We can see the stock is forming a bear flag here. And what are we going to do? We're going to enter some puts and make some money. So that's what we do. So we sell all of our contracts at low a day for 20%. Right? Think about it. You're not going to hold to your PT. You're just going to take the 20%, just take that win. What happened? It went 220%. Now you feel very, very silly and you have to blame your ancestors for your instant gratification. Fear response. Being scared. Look at the stock here. It started dipping. So you decide to cut your calls. Okay? Look, notice it's coming back down. It's starting to dip. So you decide to cut your calls. What happens? It goes higher all day. This is fear response. This is being scared. FOMO. Buying puts at the lows. Say no. So look, this stock has been selling off all day and you decide, you know what, it's going to go lower. So you just buy puts at the low because you missed all this move over here. So what do? You buy puts and it reverses on you. This is FOMO. This is the ultimate caveman trap. Whoa, Ellie, why'd you call me out like that? I really need to fix this. So how do you fix this? So the only reason that caveman, right, caveman LED here trading Tesla, Apple, Nvidia is now, hedge fund LED is because of a system. We had systems to make fires, systems to have food, systems to grow food, systems to raise families and keep people safe, right? All of this is system derived. Trading is no different. 99% of traders struggle with FOMO, but I really, really want to help you fix this forever. Misconceptions. Okay, so these are all sentences or lies or justifications you tell yourself when you're feeling FOMO. This stock is different. It will go up forever. So you have to buy it now just to get stopped out. Everyone's making money on the trade, so I have to get in. Yes, everyone's up 100% in the trade and you missed it. So what do? You decide to get in and then you lose 50%. And now you're upset because you lost money and everyone else made money. This setup might not be perfect, but I've missed 3 trades this week. I can't miss another one. The stock was ripping all week, but you were working, so you didn't get to see that it was ripping and you missed it. So the setup might not be perfect. It might be day 4 on a bullish trend. So what do? You jam in all calls and it reverses on you. Everyone makes this money on this trade. I will be upset. Everyone's in a play and you're not, and you're really upset. It's like, oh, everyone's making money talking about the stock, but I'm not. I missed it. So what do? You enter in, you chase the top, and you lose money. Another one is, I'm smarter than most hedge funds. I can out trade big money and smart money. No, you can't. If it goes against me, I'll just cut my losses quick, right? So you buy some contracts at high a day, and what do? Oh, I'll just stop out real quick. Yes, and that stop out turns into a minus 75% on your account because you refuse to be wrong. These are lies and justifications you tell yourself to FOMO into a trade. Stop it. Here's the difference. Here's what I tell myself. I don't care how high stock goes without me. I really don't. It could go to the absolute stratosphere and everyone makes a ton of money, but if I don't get my entry, I don't care. The same thing. If a stock goes down and down and down and down and down and I don't get an entry, that's fine. I don't care. There will always be another trade. There's 8,000 stocks in the NASDAQ and S&P 500 and all these stocks that are listed. There will be another trade. I guarantee it. This stock is really trending, right? This a good example is Tesla sometimes just goes up and up and up and up and up, or down and down and down and down and down. I will not buy the tops, okay? I will sit there patiently all day to wait for a dip or a pop that meets my criteria, okay? I'm not going to risk money because I'm sad that I'm not making money like everyone else. I only trade A+ setups. Anything else is a waste of mental capital. I don't want to be stressed out in midday chop with big size on some SPX. It's just going to ruin my day. Trading should be stress-free, it should be fun, and almost relaxing and soothing just watching the candles. Who cares if everyone else is making money? I've been making money for 6+ years trading. I generally don't care. Well, Ellie, why aren't you in this stock? I'm making money over here. If that's cool. I'm making money in my own lane, in my own pace. I never compare myself to everyone else, okay? Pocket watching in this industry is the way you ruin it. I don't care if you have a $100 account or a $10,000 account. We're all here for the same goal, and that's to feed our families, and let's continue to stick to that goal. I'm not smarter than most hedge funds. I'm not that smart. I just figured out a system that works for me. Hedge funds they have quants, they have algorithms, they have all these special tools and all this craziness, okay? I'm not smarter than them. They will always beat me. All I can do is play along with them. And lastly, and most importantly, is I will enter a trade on my terms, my criteria with a predetermined stop loss. And lastly, and most importantly, is I will enter trades on my criteria with a predefined stop loss. Okay? I enter trades on my terms, not everyone else's terms, and you need to do the same for yourself. So let's check out a few trades. So here we can see that the stock, which is now pre-market session. So we can see it's opening above the previous day high. So here's the previous day high, and we can see that the candle is above the previous day high. Okay, but it hasn't broken the pre-market high. So what do we want to do? We want to plan for a few scenarios. Per trade plan is we want this to break the pre-market high, come back and retest it right here and go higher. But wait, Ellie, it didn't do that. What do you do? Well, if your trade plan was for it to come up and hit the pre-market highs, what do you do? So our ideal entry was here. But what do? Do I panic? Do I slap the highs? Well, FOMO starts to set in, right? I see this all the time with traders. They see something like this, exactly like this, and then they start to get FOMO. They start to get anxious. Like, oh, what do I do? What do I do? You need to relax and listen to this very carefully. Ellie, what do I do in this situation? You look into your toolbox and you find the good old-fashioned LE model. You breathe and say to yourself, LE model. Levels first, then EMAs. Take a deep breath. You really think about it. Go, oh, LE model. Okay, broke the level. So what do I have to use next? No spoilers. So here's the setup again. So now we have our magic purple line here. So now we can see we're above the previous day high. Okay, the trend is bullish here. Okay, think back to my last video discussing daily bias. The trend is bullish here, but we're just going to wait for a pre-market high break. And we can see trade plan, level, breaks the pre-market high, comes back down, retest it, and goes higher. But here's a trade plan for an EMA. Okay, remember, LE model. So we did not get this retest here. So now we're going to wait for this purple line to come up and tag it. So what happens? It's exactly what happened. Look, it broke the pre-market high, no retest, but again, it tapped the EMA once, twice, 3 times. So you had 3 different entries to get into this trade. Think about it. Your FOMO is now gone. You're not FOMOing into these monster candles here. You're waiting for areas of tight consolidation with clear pullback risk, and you're entering it and make a ton of money. So here's the setup. The stock is below the previous day low. We know it's below the previous day low. So the daily candle looks like this. So the trend is down. If you don't know what that means, watch my previous video on how to find the daily bias. So we're going to look for, we're going to wait for the pre-market low to break. Okay. So we see the level breaks and we come up and we get a clean retest here and we want to take it back down short. But now for the EMA. EMA, we assume that we're not going to get that clean retest right there. So we want this purple line to come down and then the stock go lower. What happens? Okay, so look, we start to break it. Notice how we break it. We did not get a clean retest. The 8 EMA is actually further down than the retest spot. So what do? You're not going to panic. You're not going to freak out. You're just going to reach into your toolbox and think LE model. Okay, so we broke the level. We came back down. We popped up right to the EMA. Perfect entry. And all we do is ride it all day. This trade offered multiple entries. Okay, I missed entry number 1 up here. But what I do, I just re-hit it on entry 2. This is just a bear flag here. And I made about $1,000 on my runners. You can do it too. It's not that complicated. All you have to do is follow the system. Remember this picture of, grandfather LED trading Tesla in the video, and then he implemented a system. Now he's driving Lambos in Miami. Notice how during the entire description of the system, I didn't have FOMO. So how do we actually finally fix FOMO? Okay, we need to be prepared for all scenarios. Remember, sometimes stocks will do wild things. We cannot just use one tool. We have to be well-rounded in our system, know the ins, outs, left, right. We have to know everything about it. So like I said, use your trading toolbox. There's always multiple entries on a stock that's trending. Don't be scared. Now, you always want to focus on the levels breaking first. Why? Because levels indicate trend. And then we're going to look for the EMAs. Okay, never ever want to buy random calls and puts off an EMA when what? The stock's not trending. Okay, so EMAs mean nothing if there's no break of trend. Don't let the cavemen win. Okay, those cavemen live very different lives than most of us sitting in a nice cushy office trading stocks all day. Don't let them win. They would have FOMO at your lifestyle now. And lastly, most importantly, the hardest part of trading is believing in yourself, but I know you can do it. Anyone can do it. Please just study, document your journey, and your life will be changed forever. See you guys next time. Peace.